Kitco Mining's special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.
Gold has hit several all-time highs, so how are the junior resource companies faring? Richard Carleton is the CEO of the CSE, which I believe celebrated its 20th anniversary. Congratulations, Richard.
Thank you very much, Michael.
Let's talk about this resource market. The Canadian Securities Exchange, I believe, has about 800 listed companies. You have a unique view into the resource space.
Yeah, we've been the venue of choice for companies coming into the public markets in Canada, certainly for the last 3, 4, 5 years. And I think that this point probably encompasses some 220 or so mining companies. We've seen certainly a shift in the early part of that time frame, back during the pandemic. There's a lot of investor interest in what we would call the battery metals trade. So lithium, graphite, copper, zinc, cobalt, nickel, and the rare earths were very much front of mind for investors. And we saw a lot of companies come into the public markets at the exploration stage, of course, looking for those particular minerals. More recently, and I think obviously correlating with the increase in the price of gold, we've seen mostly gold and precious metals companies coming into the public markets. They're the ones that are raising sufficient financing to get across the line. And uranium, of course, I'd be remiss if I didn't mention the folks in that space. Both a nice appreciation of the existing issuers that are either exploring for or producing uranium, and certainly a number of new companies with projects, generally speaking, onshore in Canada and the U.S. that hope to become relatively near-term uranium producers.
One theme that I keep hearing coming out is the word bifurcation. There seems to be money that seems to be flowing more selectively to quality projects, to later stage projects. Can you talk a little bit more about the certain type of stage companies that you might be seeing, or how investing or dollars might be changing into the resource space?
Well, there's certainly, I think, not the risk appetite that many in the exploration stage would like to see from the investment community. Again, and that's not just a Canadian phenomenon, it certainly appears to be in place around the world. But which leads to, of course, the other theme that people talk about, which is there really hasn't been much correlation between the valuations of the companies that are searching for a particular mineral and the underlying commodity price. So, for example, on the gold side, you've seen tremendous increase in the value of gold, over the last couple of years. But if anything, the index of gold exploration companies, even the later stage companies that have extended their projects to quite considerable degree, where they're considering potential production or acquisition by a major operating company, still haven't gotten the love from the markets in terms of the valuations at this point. So I think the optimists in the community, and of course we know that almost nobody is more optimistic than the geological / mining industry, is that it certainly would appear to represent an interesting investment opportunity, because at some point one of two things is either going to happen. The commodity price is going to come down and meet where the underlying asset valuation is for the companies, or you should start to see considerable appreciation in the companies towards to reflect the change in the price of the underlying commodity.
Richard, there's two major macro events that we're keeping an eye on in 2024. That would be when the Fed finally starts cutting interest rates, and then we also have the election coming up right now. How meaningful is cuts to rates going to be for the resource sector when that does happen?
I think the cutting the overnight rate is more symbolic than anything, but it might help. And I think we did begin to see retail participation in this space slacken when the overnight rate began to go up towards the end of the pandemic. But the real number that people are concerned about here is typically the 10-year rate. That's the number that you're using when you're doing a feasibility study, for example, or looking at the cost of developing a mine. That's a more accurate number for your future cost of capital. And that's a market-driven price that is going to be, I think, will be higher longer than people expect, which is going to make a bigger challenge for companies that are doing those feasibility studies, for example, on a particular project. Now, again, I'm not saying that the overnight rate coming down isn't going to be a positive. I think that will trigger additional participation, particularly from the retail side. Like it will be, I think, a very powerful indication that, okay, interest rates, short rates were as high as they're going to be. They're now going to start to come down, and I think that will help spur more retail participation in the market. The second part, of course, Canada, the United States, Canada federally probably won't go to the polls this year, but certainly next. The United States, obviously, this year. And I believe the pundits are calling it the year of the election because basically most of the democratic world are headed to the polls this year in 2024. I think it's likely that whichever administration you wind up in the United States, that this whole notion of friendshoring or shortening supply chains, reducing reliance on particularly Russia and China, I don't think it matters whether the Democrats or the Republicans are in the White House. That is going to continue. So I think to the extent that you see the Department of Defense, the Department of Energy actually making direct investments into the mining space in Canada and the United States together, I think you're going to see continued support for the mining industry from the U.S. government. Canada is not speaking with a unified voice, I would say, even at the federal government level, so that you have, on the one hand, clear support in terms of subsidies for the construction of battery metal plants. On the other hand, you have things like the capital gain tax changes, which are still only proposed, which have a devastating impact on flow-through financing and other means of direct investment into the exploration and mining production industries in Canada. And I think the environmental ministry at the federal level continues to impinge on provincial jurisdiction when it comes to setting up the rules of the road for getting mines permitted and so on. So I think there's a lot of regulatory confusion that may only be I think addressed appropriately with a different government in Ottawa. So I don't think it would be status quo. If there was a change in the government in Ottawa, I think you would see a different approach that's likely to be more friendly to the mining industry in particular.
Lastly, I want to lean on your operational hat here, Richard, and talking about standing out. There's 800 companies, as we mentioned before, that are about 800 companies that are listed on the CSE. A lot of this is being able to kind of stand above and being able to tell your message to get noticed. What's the one thing that you would tell? What's the one piece of advice you'd kind of give to all these companies in terms of actually kind of getting their message out?
Well, it is, as you know, and of course, Kitco is part of the infrastructure and the ecosystem to try to engage with mindshare. I guess it's pretty easy to say, but the traditional retail investor who has backed the mining industry, particularly the exploration space, is probably aging out. People my age. And with 5% interest rates available risk-free, basically, devoting a portion of your investment portfolio to the mining space when you're 70 years old, or I'm not 70, by the way, but maybe a tough sell. So the challenge really for the industry is to engage with the younger investor population, and they are self-directed. So it's not a case where their investment advisors are doing the old school thing of putting together a transaction, raising money from their high net worth clients to back a particular management team. This is a sort of situation where companies have to engage with investors who are self-directed. They're trading on these zero commission platforms. They get their investment information and their news on social media, and getting through to them who may not have the best impression of the mining space. They may think it's environmentally damaging, that it's not necessarily supporting Indigenous reconciliation. There are a number of issues that have been laid at the doorstep of the industry. And collectively and individually, we need to tell a better story to these potential investors in the industry. So again, hold up that cell phone, every compound in that device was mined. And it's going to continue, and we need these minerals, we need these resources. They got to come from somewhere. And as I say, we should hope that they come from companies listed in Canada, subject to the highest standards in the world. And again, we can continue to build wealth for the Canadian investing public.
Richard, thanks for your time.
My pleasure, Michael.
My name is Michael McCrayer here at the Mining Investment Event of the North for Kitco Mining.
Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.